The drones and missiles may be flying over the Middle East, but your wallet's taking a big hit too. The Iran conflict just isn't a distant geopolitical story. It's a story about gas prices, unemployment, inflation, and the cost of everyday life, right? My honest take, when the Middle East coughs, the rest of the world sneezes. Let me bring you up to speed on the latest development and what this means for you and your money. Welcome, everybody. I'm Curtis. Today, we're going to cover some big things that are happening in the world right now. And in this video, I'll break down exactly how it affects your wallet, your bills, and of course, how your family's money is all affected by this. I want to make this a quick 15-minute rundown or so with the real numbers from credible sources. Let's see if I can cover it all quickly. But before we dive into this, please give me a like, a subscribe, and share a comment that on how any of this is affecting you or your family, how it affects your money. Let's get into it. All right, so we've got the conflict in Iran, right? The situation is the U.S. versus Iran, Trump versus Iran, right? Of course, conflict's been it has started since February 28th of 2026 this year. What happened was the U.S. and Israel struck Iran. Iran hit back by closing the Strait of Hormuz, which I'm sure you all have heard on the news over and over and over, right? They've been setting up mines and things like that in the strait and practically not allowing these ships that are carrying oil to enter and exit out of that strait. So here we've got Trump's New Deal terms. Iran must agree to never have a nuclear weapon. They must open the Strait of Hormuz immediately with no tolls and remove all underwater mines. And I had mentioned, right, they put mines into the water so that, of course, if any of those ships pass, without paying a so-called toll, then uh, something awfully really bad would happen to those ships. And of course, nobody, it's an open waterway. Nobody wants to have to pay tolls to go in and out of there because I mean it's a world's waterway. So what happened recently? CENTCOM is striking Iranian vessels. The United States military hit boats laying mines and shot down drones in the Strait of Hormuz just this past week. Iran fired a missile at a base in Kuwait, and the ceasefire is essentially shaky. I mean, it's been a challenge to negotiate between the United States and Iran. Of course, there's been several back and forths, and even in the ceasefire situations, I mean, there's still always conflict, and they're trying to get all that situated. A deal is supposedly close, right? We've been hearing about that going back and forth from the United States over to Iran several times. I think a lot of folks are fatigued with that, fatigued from hearing about that as well. But obviously, it's not done yet. Negotiators agreed on a 60-day ceasefire extension, but of course, Trump hasn't signed yet, and Iran continues to strike back using words saying things like no trust, only actions. And of course, we're going to plan for this to drag on until we see it actually happen, that they're going to allow I mean, the other countries to move their ships in and out with all that oil that it's carrying. All right, so on this slide, let's get right into the heart of it, right? How does this impact us? And the first thing that we notice is the Iran conflict affects our gas tanks, of course. The average gas price right now in America is at $4.47 per gallon, okay? Today, this morning, I pumped gas, premium only, and it was almost $6 here in California. Um, I've got an 18-gallon tank. It was, 16 gallons fill up, $100. So that's pricey. Now, moving forward, we've got $300+ extra fuel costs per household since February. I mean, that's, just been a few months. So if you times that by 4 quarters, obviously we're paying easily over $1,000 more per year on gas at this rate. And, everything's still pending. We're not sure what's going to happen. We're all waiting to see. Even if they come up with some sort of negotiated deal, the aftershocks of the oil energy is going to take place, and I'm curious how that will affect us all. We're gonna watch and see. Okay. Currently, Brent crude oil is at $92 per barrel today. It's under $100, so it's obviously coming down a little bit. We'll see how that turns out as well. Iran shut down the Strait of Hormuz, which is the biggest oil choke point on Earth. Oil prices shot from $61 a barrel in January to 126 at its peak. Okay, that's over twice as much, doubled. That just makes me think back of when there was a surplus of oil during COVID, right? I mean, and there wasn't any places to put all these barrel. Now we've got a complete different situation. Gas prices jumped from about $3 to $4.47. That's about $1.50 more per gallon. Americans have spent $40 billion more on fuel since the war started. That came from Brown University. If you really think about it and put it all together, right, that's how all this money is coming out of your pocket. I mean, it's real big money that can go to other places, right? Feeding your family, buying groceries, and saving or growing your money for uh, the long term, your retirement, things of that nature, paying off debt, right? So greatly affected by oil and the gas prices. All right, so what happens when oil goes up, right? Prices go up. And of course, we're seeing prices going up all over the place again. Inflation rate is at 3.8%, the highest it's been in 3 years. Of course, gas, groceries, electricity, clothing all cost more than it did last year. The Fed's target is 2% inflation, right? That's, I mean, at this point, I mean, when I look at 2%, that's that's real low down there, and it's going to take a while before we get back to 2%, or at least to their on a trajectory towards their goal, the Federal Reserve's goal. Okay, 3.8%. We're almost doubled the 2% goal of the Federal Reserve on inflation. Now, your savings are also worth less every month. Prices are staying high and causing that. And then real paychecks are also shrinking. Wages went up 3.6%, but prices went up 3.8%. So what does that mean? That means that inflation is beating your pay raise, your cost of living adjustment, if you're getting one, right? I mean, if you're obviously if you're fortunate enough to be getting one, and we're going to be getting into other things that are at the heart of this whole situation, unemployment, how it really affects you as well. So, ultimately, what does this mean for you? Credit card rates stay high, okay? Most are over 20%, which is, I mean, it's pretty common to have credit cards at around 20%, but more than that, I mean, it's going to continue to climb with inflation. That's the whole point. Then we've got mortgage rates, right? Are some of you guys looking to buy homes? I mean, it's a dream of most folks to try to buy a home and live in it for the rest of their lives. And right now, with mortgage rates at 6.5%, I mean, they're going to be moving above that potentially. That's going to make things less affordable for many folks to be able to achieve that dream of purchasing a house. And then we've got the everyday costs. We've got gas, food, insurance, utilities. I mean, it all keeps climbing. Continue, we continue to be able to buy less with what we've got, essentially. And then we've got the savings rate dropped to 2.6%. People are burning through their savings to keep up as well. So, on one hand, we're spending too much money where we can't save. And then on the other hand, we don't have enough money, so we've got to pull out of our savings to keep up with the high costs. Most families have no cushion left. And of course, even prior to this, one unexpected bill could put a person, a family in a tough spot. I mean, that was already the case prior to high cost and high inflation. Job reports came out Friday, and it's a big deal. Last month, only 115,000 jobs were added, which is lower than normal. Unemployment's at 4.3%. GDP growth got revised down to only 1.6%, right? That's one thing that I want to mention. If you keep up with the economics, the news on economics, right? I mean, they revise things from time to time, and it's been kind of common lately, so keep your eyes on that. Consumer confidence from the University of Michigan, which is a study, a research that they do. It's highly credible, real popular, right? Consumer confidence hit a record low. Okay, just wanted to share that with you. And here's the kicker: the Fed's not cutting rates. In fact, a majority of Fed officials said they might need to raise rates if inflation does not cool down. Again, if you watch some of my other videos, I had mentioned, okay, theoretically, if you uh, want to bring down interest, I mean, if you want to bring down inflation, you have to raise interest rates. Okay. Now, on the flip side, if you want to drop interest rates, right, then inflation will rise. And so that's why they don't want to drop down rates right now. They're at a tough situation. Kevin Warsh just stepped in as the new Federal Reserve Chair. Keep an eye on that as well. And we're expecting him to deploy a different philosophy of economics. So that's definitely something to keep your eyes on. Okay. What does this all mean to you? It means that your mortgage, your car loan, your credit cards, they're all going to continue to stay expensive, okay? If you're job hunting, don't wait around. Continue to job hunt. Try to find something at least to stay afloat for the meantime. At least that's my opinion, okay? And then one thing to keep in mind, especially if you're trying to find a job right now, companies are being more selective, okay? Why is that? Obviously, because if the unemployment rate is higher, there's more talent in the pool. They can have, I mean, a lot of highly qualified people are applying and taking on jobs that are, that needs way less qualification. So if you think about it, if you're less experienced, you're probably battling against somebody who's got a graduate degree with who knows, 15, 20 years worth of experience and hard working, right? Which makes things a lot more challenging. But let's continue to drive through this right here. Okay, everything costs more, right? That's the theme of this whole thing. How it all connects. I'm going to go from the left side of the screen. If you take a look at that column, number one, the war started with Iran. The Strait of Hormuz ended up being closed. Oil prices are skyrocketing because we can't get oil out of that Strait of Hormuz, right? And then, of course, with oil prices skyrocketing, gas prices jump to super high levels. What does that mean? That means that all these big rigs that are driving on the roads or the ships that are being the logistics for our supplies and goods, the planes that need to use jet fuel, everything's more pricey, and it costs the shippings uh, to go way up. Okay, that's number five. Number six, how that hits us. Okay, so if shipping costs more, then that means that to ship groceries, to ship goods, everything that we buy, right? They've got to raise the cost on that and pass the cost down over to us. We're the buyers, we're the consumers, and it's going to cost more for us. So what happens, right? Inflation spikes up to 3.8%. The Fed has to keep rates high because they don't want inflation to get out of control. They don't want things to cost way too much. And then for those of you who have, mortgage, car loans, credit cards, right? I mean, those things are going to be expensive. If you're looking to buy a home again, right? The rates being high, it's going to be more expensive. If you're looking to buy a car, rates are going to be high. It's going to be more expensive to buy a car at times like this. Things to be mindful of, the column on the right, okay? Imported goods such as electronics, clothing, car parts, they're all getting more expensive from everything that we're dealing with, including tariffs. Groceries will get worse later this year. Fertilizer prices are up 31%. A recession risk hasn't gone away. GDP growth was low at 1.6%. And then, of course, right here talks about refinancing your home. Probably won't save you money right now. That's true because I mean the mortgage rates are high. If you refinance, I mean if you ended up buying your home years ago at 3% and you're refinancing at 6.5%, I mean you're going to be paying tons more. Who's going to want to do that, right? So some things to be mindful of. And then we've got high yield savings accounts are actually paying well right now, of course, right? I mean, that's a way that you can leverage high rates is to put your money in high yield savings accounts. You can make more money, more return off during a time with high interest rates. And then lastly, on the bottom line, retailers may start running more deals as people spend less, wait for sales on big purchases. So I want to tell you what to watch for this week and what to do, okay? So this week, Friday's US job reports could move markets big, okay? We're talking about the stock markets. A lot of moves in the stock market is going to be real sensitive to all these things. So keep an eye on that, especially if you trade occasionally, trade from time to time. Any signals from the Fed about raising or cutting rates are things that we want to keep an eye out on. Of course, that's going to affect everything that we do, even especially if you trade in the markets. Energy prices on whether Iran deal gets signed. It's been going back and forth. We've been hearing about how close it's been. Keep an eye out on that. Let's see if something actually happens this week. And then big company earnings are businesses making money right now. That's one thing we want to keep an eye on. I think Walmart had disappointed recently, so all those things tell us how our economy is running right now. And if you care about your wallet, if you care about your money, if you care about the financial well-being of your family, right? You want to be on top of these things and at least be able to maneuver around it. The smart moves right now, build up your emergency fund if you haven't had one yet, right? The standard for that typically is 3 to 6 months expenses. You can put that into maybe a savings account where it's uh, got good easy liquidity. You can pull it out if you need it. Okay, have it readily available. And then I mentioned earlier the high yield savings account. Right now they're paying between 4 to 5%. That's a good return for a high yield savings. So if you've got some money that you can just sit around there to get a decent return, I would. It's my opinion that it'd be a good choice right now. Of course, hold off on any big purchases. Uh, it says to wait for sales, and uh, again, my opinion is that they will because most folks aren't going to be making huge purchases, right? They're going to start putting on things on sales for us. So keep an eye out on that if you're looking into it. Pay down high interest debt before rates go even higher. Okay, I mean that's something that should be basic. I mean, we always want to pay off our high interest debt before anything, because even if you're, I mean, say for example, if you're trying to invest in the stock market and a good return would of maybe 10%, maybe even 12%, okay, cannot beat the high interest debt of a 20% credit card or something like that. Just keep that in mind. Don't panic sell your investments, okay? If some of your investments that you're going long on, meaning that you're trying to hold on for the next 2 3 years, just because it drops maybe 10%, 20%, right? Don't panic sell. Make a wise decision. At least that's my opinion, okay? I don't know what your situation is, but my opinion is if you're going long, right, don't let your emotions get the best of you. Again, this ain't financial advice. This is strictly for your awareness. I want to share these things with you. I want you to be informed. I want to share my opinion, of course. And ultimately, it's for you to make the smart choice that's right for you and your family, okay? Protect your household. All right. Hey, thanks everybody for watching. Okay, I hope this was helpful to you. I wanted to break down some of the most recent developments for you, and hope that you took something away from this right here. If you can give me a like, a subscribe, if it had helped you out, that'd be fantastic. Drop a comment if you've got any questions. I'm more than happy to respond, and I'm going to try my best to respond to you. On top of that, if this video had helped you out, if you think that it can help anybody else out, right, please share it. I mean, share it with them if it can assist them as well. Subscribe, put that notification thing on. That way, you know, if I when I drop off a video in YouTube, you'll be able to view it. And I plan to drop more information to keep you up to date. Thanks everybody. Again, make it a great day.